Please welcome the panelists to the stage for Crypto's Continuing Chronicles, moderated by Sharon Paul, Head of Payments, Southeast Asia, Exfers.
Good. 3 minutes over? 3 minutes over? Oh, they'll call you again.
Okay, good afternoon, everyone. Don't be too alarmed, you actually see a missing seat here, because I think Sutendu is actually still waiting for his PT test, but he'll actually join us midway, all right? So I'll welcome him on stage later. So
How many people are
let's
allowed
kick
inside?
things off because I think the schedule is
people are
pretty
allowed
on time
inside
for
too?
this conference. Thank you everyone for joining us this afternoon. I think our topic is about the chronicles of the crypto industry, and the media is often kind of shedding light. Whenever we have rapid bull runs or bear markets happening with different trends and application of crypto, the media is always here to cover it. So I think let's take this chance, given the fact that we have pretty diverse panel today with us. All right, so I'll just introduce all of them, but I'll also give them the chance to introduce themselves, and we'll dive straight into it. So having here on my panel, I have Gerald Goh, CEO and co-founder of Signum Singapore, and Suptendu, who is our Chief FinTech Officer from MAS, will join us shortly after, followed by Justin, founder of Tron, and Michael, co-founder and CEO of Amber Group, and Flex Young, CEO and co-founder of Bevel Finance. For myself, I'm from a company called XFirst, and we're the leading payment gateway for pretty much a lot of the retail-facing digital assets exchanges here in Singapore. And we did launch a Singapore-pegged stablecoin called XSGD. So maybe to kick things off first, maybe Gerald can introduce herself, and we'll make our rounds down.
Great. Thanks so much, Sharon. So I'm Gerald Goh from Signum, and just for the folks in the audience, Signum is the world's first fully regulated digital asset fintech group. We are operating out of dual headquarters in Singapore as well as Switzerland, and from there we operate globally. In Switzerland, just to put a bit of a finer point on the regulation, when I say that we are fully regulated, in Switzerland we operate under a universal banking and securities dealer license, and in Singapore we operate under a capital market services license. So basically what we do and our value proposition is we provide clients of Signum with a fully integrated, fully regulated platform for them to access complementary banking and asset management services, but with crypto and digital assets at the very heart. Ultimately, what we offer our clients, and there are 800 over clients representing over 2.5 billion of assets under administration today. For these clients, what we allow them to do is to build, maintain, monitor their digital asset portfolios with complete trust and peace of mind.
Right, and Justin, introduce yourself.
Hi, everyone. I'm Justin Sang, the founder of Tron. Tron is a decentralized blockchain protocol, so it's also known as DAO. So basically, even I'm the founder, but I only can facilitate the development of the protocol itself, but all the protocol governance is governed by the community itself. So we have 27 super representatives, which is govern the whole network, democratic elected by the TRX token holders. We are also one of the biggest stablecoin protocol in the world. I think it's basically the same level with Ethereum. We have over $40 billion worth of the stablecoin on our protocol, and we are handle over 15 billion transactions every day, which is 6 times more than PayPal is doing. And also, basically, Tron is a smart contract platform, so we can do all the smart contract platform can do. So we have DeFi application on network, we have GameFi application, we have NFT, NFTFi, and all the new exciting things happen on blockchain, all on Tron blockchain. And also, right now we are collaborating with USDT, USDC, TUSD, and USDJ, most of the regulated stablecoin in crypto space, and try to be the next generation of global settlement layer. Thank you.
Yeah.
Sure. Hi, everyone. This is Michael Wu, co-founder and the CEO of Amber Group. Amber Group is a leading global digital asset platform. We help everyone from the largest billion-dollar institutions, family offices, to global consumers in everything they need as it relates to crypto finance and digital asset services. The firm is over 500 people globally. We're across Asia, Europe, North America, and we provide our 24/7 services both digitally and over voice through our professional team. We are also one of the largest liquidity provider across the whole space. On an average day, we are probably 3 to 5% of the global volume. And we provide our services both directly to our customers, and also we welcome partners such as other traditional financial institutions, other tech companies to integrate our tech and the solution so that they can better service their customers' crypto finance and digital asset needs as well.
Yeah, hi everyone. Thank you, Sharon, to have me today, and I'm very happy to share all the crypto things with you guys. As adventurist from traditional finance in a crypto finance business. I am the founder and the CEO of Babel Finance. Our company is actually one of the biggest financial service provider in crypto space, and actually our vision is actually to connect or to become the gateway to connect the traditional finance to crypto finance. We want to bring this opportunity, the wonderful opportunities in this industry to traditional finance. And actually by managing about $8 billion US worth of crypto assets, we are currently provide borrowing and lending services and asset management services, as well as prime financing services to institutional clients, as well as high net worth individuals, not yet touching the mass market. We are more like an institutional intermediary. Yeah, so basically about this. Thank you very much.
Right, and just in time, last but not least, we actually have our Chief FinTech Officer from the MES. Ray Supendo can just a very quick one-to-liners. We just began.
No, it's good. It's good.
Okay, all right. So let's jump into it. We just started. Hopefully, in the remaining 30 minutes, we can have some insights to take away for all of you. So I think financial markets, is something that touches all of us, from consumer to wholesale to retail. Maybe let's start off with this to understand really what's the impact of crypto or Web 3.0, as the buzzword, have on the specifically asset management scene. Maybe to set some context, I think maybe starting off with Flex to address this question, followed by Michael and Gerald. Just briefly, in the 3-4 years ago, we were still talking about banks and non-banking FIs adopting Web 2 and cloud. But now, fast forward, 2021, we are talking about what can banks and how can non-FIs adopt Web 3, which is distributed permissionless ledger. So maybe narrowing to a focus of asset management, can share some insights as to in what way has crypto impacted this class of asset management?
I think crypto has been recognized as a new asset class rather than an alternative asset class. This trend has been evolving very, very fast. Previously, I think several weeks ago, the very first future-based Bitcoin ETF has been approved by SEC, which is a very good sign of the institutional adoption of Bitcoin as a new asset class. And actually, in this industry, we see lots of opportunities, not just in a Bitcoin-based product, namely people allocate Bitcoin crypto as part of their portfolio, but also we see lots of USD-based opportunities. In this industry, the arbitrage opportunity for US dollar-based product will be reaching 30%, 40% annualized, a risk-free return. Of course, it's very hard to price the counterparty risk in this particular industry, but we definitely see this as a very good opportunity for those own money to capture those excess return in this industry, comparing to the 3 to 4% of the risk-free return in traditional finance. And as well as we noted that because of volatility of this industry, normally people will fear volatility is something bad, but actually volatility also brings yield, because we also provide option-based structured product for our clients, what those traditional private bank provides to their clients, shark fin, snowball, those kind of products also for the clients, so they can capture the volatility opportunity in this industry. So we see lots of those institutional clients, and as well as high net worth individuals came into this industry for especially in asset management. But for mass market, I think Amber has many other things to say about that. Yeah.
Okay, yeah. I think perhaps Michael can share some, I think just continuing from what
Sure.
Flex have shared.
Definitely. I think like Flex said, at this point, I think the mainstream market more or less has agreed that crypto, at least as an asset class, or Bitcoin at the minimum as an asset class, is at least a good diversification in every investor's portfolio. Now, how that is constructed through ETFs, through direct holding of crypto assets, or through other form of structured products, trackers, is up to everyone's decision. But at least more or less we have come to agreement that crypto as an asset to add on your investment portfolio is probably a good idea. Now, moving beyond that, I think what's even more exciting is crypto finance as the underlying technology as to what it can enable. Right, so beyond just enabling the crypto native assets, Bitcoin, Ethereum, to be owned, to be transacted, to be traded, to be invested by investors globally, I think it can do a lot more to that. And back to your question regarding Web 3.0, the way I think about it is the broad context of this Web 3.0 migration is everything is migrating digitally. Our lifestyle is migrating digitally, and therefore naturally assets are. So using the same underlying technology, what we call crypto finance, you can essentially transact even traditional assets on blockchain in a much more seamless, borderless, and efficient way. You can even generate a lot of new form of assets, content, data, cultural arts. All of these can be transformed into assets in this kind of Web 3.0 fashion. And then they can be owned, they can be invested, they can be transacted through crypto finance. Now, from an asset management point of view, right, I think that is very beneficial for every investor, large or small, because as an investor, you always want to have a diversified portfolio. So when markets go through different paradigm shifts, you always have some parts of the portfolio outperform the others. Right? And through this underlying crypto finance technology, you really can have much easier access and much more visual access, much cheaper access to all these different assets we just mentioned. And therefore, I think beyond just looking at crypto as an investment asset itself, which is exciting, again, I think what's even more exciting is what crypto finance as the underlying technology can enable us.
Maybe just continuing to your point about Web3 and the application of it, I think I'll kind of direct this also to Michael to just continue your point, because I think Amber is kind of one of the front runners in being comfortable with both the centralized finance environment as well the decentralized finance environment, which is now often coded as DeFi. So maybe you can really share a little bit more details and maybe just helping the audience understand a little bit more by when you mentioned that when the tech or financial markets are enabled by Web3, exactly what are you talking about? Like what's the maybe convergence between CeFi and DeFi that's really happening?
Sure, thank you, Sharon. Like you said, I think as a one-stop crypto finance or broadly digital asset services provider, we have to understand both, centralized finance and decentralized finance. And in short, for those of you who are less familiar with DeFi, you can think of DeFi as, the same kind of financial services, but instead of done by a services provider, it's done by a program, a decentralized program that's run on distributed servers. Now, what that essentially enables is taking out sort of the middleman, right? And by taking out the middleman, essentially what you ultimately enable is, at least theoretically, cheaper services, because you take out the middle layer services layer. And also, a sort of a more transparent pricing, more transparent mechanism in how this operates. Now, with all of that said, if we look at the DeFi space now, I don't think we are fully there yet. We are getting there slowly, but there's still a lot to be built, right? And I think what ultimately it should enable, again, is we should focus more on what the technology is capable of, and be less stubborn about the ideology of whether it's centralized or decentralized. And we should care more about how that is to the end user experience, whether that's an investor, that's a daily consumer, and all of that, right? We should think about what this technology brings and how do we maximize the good things it brings while sort of solve the problems on the flip side, right? Now, along with DeFi, it brings clearly probably, more, I guess, it takes a different sort of framework to regulate it. It probably puts a different type of skill to monitor its risk or monitor its security, its governance, right? So therefore, I think the underlying technology is there. It's all about how we as an industry and also working with regulators together put out the best framework so it can be applied in the best way. So that in the end of the day, it can actually benefit the end investor and benefit the end consumer the most.
Thank you. I think for the second half of this panel, I kind of like that you talked about the ideology of crypto because I was just thinking about talking about that. Crypto is about decentralization, permissionless access, but yet we all know that consumer protection or for the benefit of the markets as well, regulations do need to come in, or the concept of control needs to come in. So maybe starting with Subnendu, how do you kind of reconcile these two very binary, very polarizing ethos between the need for control and protection, but yet, this asset class is built on the fundamentals of permissionless?
Good. Thanks for having me. Got delayed in the art test. Well, I'm happy that Michael spoke about purpose more than the speculative part, which is a good news. At least the champions have reconciled to the fact that there's something more than speculation. Just to get it out of the way, I would strongly send one message is that cryptocurrencies, retail investors, you should be very, very careful. And I think that's a bad thing to do if you don't understand to invest on that. And for the operators, I think if anybody trying to scam or something which is against the law will come heavily on them because this is something we don't tolerate. Now, coming back to the purpose of the technology, in fact, in the last week, Singapore FinTech Festival, somebody made this observation that is a 20th century institution looking at 21st century technology. So all the risk you see, all the articulation you see are from the 20th century structures. So that's that gap, and that we have to overcome. And if you look at the Web 3.0 architecture, I would look at in 3 different stages. First stage would be is to understand the pieces of the technology and how do they become useful to what we have already. Things like AI, use of 5G, use of a part of the distributed ledger technology. You start putting stuff there. And with this new construct, you can see some of the digital services getting better and smarter. And I don't think it goes against the regulation we have today. Then comes the second stage, where you are essentially taking a piece of that new technology, especially the smart contract, the proof of obligation, and saying that, do I need to reduce some of the intermediaries in between, especially on the back office and the middle office functions? Can we take it out and reduce some cost structure? So till that time, till second stage, I don't think any regulatory conflict will come. The real conflict comes when you go to the level 1, which is a very philosophical shift, where we are saying we don't need anything in between. There is this 2 endpoint. They decide to transact, and there's a smart contract where the obligations have been encoded and they execute a transfer. And that will be powered by a digital currency, may or may not be issued by the state. Now that truly puts a lot of question around beyond regulation. Nation state, central bank, all the institutions which is running our economy today. So that shift is something far off. But in the meantime, you will see some of the existing Web 3.0 construct getting stripped out and being applied to the financial services as you see today. Especially if I have to break down the technology from a business term, there's a proof of identity, there's a proof of value, there's a proof of obligation contracts, and a proof of transaction. Most of the experiments and implementation of this new technology will be in the last bucket, proof of transaction, to help the quality of data, the proof of the transaction, the provenance pieces. So that's where the constructed, from a regulatory perspective, the only regulation we can think about is a tech risk management guidelines to ensure that proper risk resilience being maintained as you use this tech stack.
Okay, that's a very good point. I think the thing I took away, you're kind of right. I think a lot of people around right now, how they can reconcile with regulations is that proof of transaction part of it.
Yes, indeed.
Yeah. So perhaps, Gerald, I think you're kind of a unique role in the industry, especially, and on this panel, you have taken on from day one for Signum to be, your stance is going to be the regulated party, and you're prepared to, it is challenging for a regular party to deal with a environment that most counterparts are still figuring out, I think, what regulations mean for them. So for you, I think one of the requests that you see from the market, but given your stance to stay regulated, how are you kind of coping with that too?
Yeah, thanks for Sharon for saying that. And just want to return to the asset management point also and the regulatory point that some of the fellow panelists raised. I think one thing that is certain, and I think all of us here witness it in the day-to-day, is the increasing institutional adoption of crypto and digital assets more broadly, and now the struggle to implement and integrate it into the context of a traditional diversified portfolio that many of these long-term allocators already run. So it's all fine and good, and I really appreciate those discussions around what is coming next. DeFi 1.0. I think we're hardly even done with DeFi 1.0. We're talking about DeFi 2.0. When the fact of the matter is, the mainstream investor is still struggling with, you mean there's more to crypto than Bitcoin, and you mean Bitcoin and Ethereum serve different functionalities? I think that's where the bulk of the market, especially the institutional market, the high net worth, the ultra high net worth, and the corporate market resides today, right? I think they're still deciding, okay, I think the one thing that we hear definitively is the view that, okay, crypto and digital assets are here to stay. Now what to do about it? From our perspective, it's interesting that, my prior career before Signum, when we helped institutional investors make a leap into a new asset class, let's say implementing to venture capital for the first time, and clients that I was working with, mostly endowments, foundations, pensions. Most times when people decide to implement a new asset class, like going from 0% to non-0% in venture capital, the next step after they make the decision is not then to start directly investing at Series A and seed stages in startups. But for whatever reason, most people seem to sort of conflate getting exposure to crypto with moving from 0% exposure to suddenly owning a portfolio of direct tokens, Bitcoin and Ethereum and the like. And I think that's because there's a lot of confusion about the implementation of the space. So just returning to the asset management question, yes, the technology is here to make it, the tokens themselves more fractional access and making them more easily transferable and a variety of exchanges and marketplaces. But fundamentally, implementation might not take and should not take a form of direct token exposures if you as an institution are not set up to do that, right? If you are not, I think the question you should ask is, if you're not making direct stock investments yourselves as an institution, should you really be considering building a portfolio of direct crypto tokens, or should you be working as you do already with other parts of your portfolio with investment managers, asset managers who are regulated and able to do things in a way that align with your organizational vision, mission, but also in a fully regulatory compliant sort of fashion. So that's on the implementation side. Now, when it comes to existing as a regulated player in a somewhat evolving asset class, I think it's always been a challenge, but it's assisted very much by choosing the right regulatory strategy and choosing the right financial jurisdictions and financial hubs to be situated in. I think we've always had a good conversation with our regulator and at the MES, and also in Switzerland with FINMA. And I think the regulators have been very happy to embrace innovation, embrace change, but when it's done so in a thoughtful, considered manner, that is at the right pace for the specific, the jurisdiction in which the products and services are being rolled out. Focusing on initially concerns around anti-money laundering, around terrorist financing, all that, and now shifting conversation towards more investor suitability and making sure that those things are safeguarded. I think it's an ongoing discussion and dialogue with the regulator, and we take it one step at a time. Without hogging the mic too much, the last thing I would say is I know you were sort of heading towards the direction also. How do we bring together these two worlds, and how do we what can they learn from each other? I think for us, And what's the role of, I guess, a centralized intermediary, regulated centralized intermediary like ourselves in the space? I think it's really, for many folks, understanding the complexities and catching up with more than a decade's worth of developments in the crypto and digital asset space is already a lot to take in, a lot to absorb. If you have to then layer on the complexities of implementation by yourselves, that's a bridge too far for many to cross. So the role of centralized financial institutions, I think, in crypto and digital assets continue to remain the same as they do with other more esoteric asset classes, which is a trusted guide to be able to help folks thoughtfully implement exposures in a completely regulatory compliant fashion.
Thanks, Cheryl. I think definitely, there are two parties that I want to hear, just continuing from what Cheryl has shared. So starting with Subnandu, and actually Justin, I would love to hear your point of view later.
Yes, I think I just want to make it easier to, and in my mind at least, I don't see a complex process, especially on the crypto tokens, because you are taking an existing physical asset, you are creating a digital twin, cryptographically secured, on a DLT network with two parties willing to transact in a safe way. Nothing complicated there, right? So I think the asset class itself is easy to understand. And you have firms like Signum who are doing all the custody services on ensuring that there is no bad elements or bad thing going behind this in terms of anti-money laundering. I think the big question is, if you take out the speculative part away from the system and purely focus on the purpose, purely focus on the efficiency, purely focus on liquidity, and I think there is a huge shift on that particular space. And I think you will find investors and also asset owners willing to move in that space. I have no doubt on that. In fact, I was pleasantly surprised. I went to Freeport in Changi. I saw this Picasso painting lying there for generations, nobody's seen it. Now, if somebody can take it and put an NFT and put the right governance around that, and that becomes available to the market, I can own a little piece of that art and also display on my home a Picasso original in a digital form. Nothing wrong in that. I can understand that asset class clearly. So there is this real asset creation based on real economy. As long as we stay away from speculations, crime, syndicates, fraudsters, scamsters, stay away from them, I think we have a good way to go forward.
Thank you. I think, Justin, to set some context for yourself as well, I think most people are coming more from the TradFi, centralized finance world, trying to adjust to this new technology. For yours, your background, you came from seeing the tech value, and I think, since, maybe unknown to most, I think I kind of read up about you, and I think since 2012, in fact, you have been kind of an advocate of, blockchain being a key shift in the way value can be transferred. So for yourself, how do you, on the flip side, from DeFi to CeFi, how do you adjust that way? Yeah.
Sure. I think blockchain technology is a very regulator-friendly technology because first of all, you don't need to trust a single party for the technology. All the code is open source, so everybody can verify and check how the code runs and what's the results of those code. You only need to trust math and also the logic behind all the codes. And the second, I think, all the license for the financial institution is because sometimes we need to trust a single entity, trust a single person to hold, or like a country to hold all the assets. But in the blockchain world, this is fully decentralized. All the people around the globe, they can check, verify the results, and all the ledger is managed in a very decentralized way. The validator might come from 100. For example, today Tron, we have over 100 validators around all the globe. So even for myself as a founder, I can't change any results happen on Tron network. So I believe this is a very good foundation for Web 3.0. So which basically every institution, every regulators, they can trust decentralized network like Ethereum, Bitcoin, and Tron. So to make sure all the results on network is trustworthy. And then I think blockchain network also provide all the track record for all the transaction, which is precious when we trying to have anti-money laundering, AML, and KYC, like know your customer. I know lots of the banks find like very hard to trace all the transactions, but in the blockchain and the ledger perspective, basically you can check like all the transactions from day one. So where those transactions come from, like even they went to exchanges, you know those addresses is from exchanges. You can get information from all the centralized exchange too. So I think basically it's turned the black box of financial services into a fully transparent way to check all the transaction. And also, third, I think it's very important. Basically, blockchain services is a global services provider. So it's also eliminates the gap between different countries. For example, like today we have SWIFT has one of the global settlement layer for all the wire transaction. But the biggest problem for SWIFT is SWIFT basically is centralized control by like US, of course. So basically, if you are only a member of SWIFT, it's very hard for you to participate in the governance of SWIFT, and also at the same time, you can't be treated like equally in the SWIFT network. But for blockchain, there is no threshold, right? It's a permissionless network. Everybody, as long as you have a computer, you can run validators, you can check the results of the blockchain. So that's why I feel like this is also very friendly to small countries when they participate in this kind of the new financial network.
Right, thank you. I think just to share also my personal experience, I think the company X First right now, we have a subsidiary brand called StraitsX. We're also kind of really trying our best, right? We are always known as a normal payment gateway. We deal with your payment licenses in the current regime, and we try to adapt to see how we can kind of come out with a ledger system. So I think blockchain ledger. So in our case, we came out with a 100% backed. I think that was our way of reconciling. You know, our stablecoin is essentially just 100% equivalent of Singapore dollar, and we just float this Singapore XSGD stablecoin into the DeFi world and see how it adjusts. But at least, you know, fundamentally how it was created is still somewhat in the centralized environment.
So Sharon, a quick point on the payment side. I think we sometimes overplay this value of payment using blockchain. In Singapore, you can send money to each other zero cost instant using PayNow. Singapore to Thailand is now connected. PayNow to PromptPay, 3% cost of transfer instant without any barrier, no SWIFT network. Singapore is getting connected to India and Malaysia next year. So I think the notion of blockchain solving a payment problem is a bit of a far-fetched because the existing structure can solve for it. What I buy from his argument definitely is that the design of the system can be used to make things efficient, but I'm not sure how much that actually translates to a complete blockchain network. Second thing, I think there's a very naive understanding that you can read all this. How many bankers or regulators can read a C program called Hello World? Okay, this is very, very detailed. I think we have to also understand the ability to process complex technology as a way to make it simpler. So there's a bit of a naivety going around in promoting a technology which is still at early stage.
All right. Banking in on that point, I already keep this open to the floor. I think anyone can take this. I think crypto in the application, I think everything is trending so far in the financial market. So let's stick to that first. There's your banking FIs and there's also your non-bank FIs. So I think maybe hearing from Michael or Flex, where do you see where non-bank FIs can come in? And then maybe I'd love to hear the opinions of others.
Sure. I think, you know, it's back to your question, right? I think first we got to define, you know, when they come in, what do they do, right? I think, you know, right now the industry is still, and I think, you know, it's both a blessing and a curse. I think more and more so of a curse at this stage is people are too focused on the speculative aspect of the whole asset class, right? People are still very focused on the prices going up and down every day, right? How big are the transaction volume, how much money I made, right? This is like Swapnendu said, is very misleading because, you know, you also have a lot of investors who do not make money or even lose money in the asset class, right? But if you have a lot of financial institutions, or broadly, if you have fintech companies that coming into the asset class, or more importantly, coming into part of the ecosystem to build the technology, what I hope to see, and I think what we are starting to see with firms like Amber Group or many of us on this panel working on, is we are trying to make crypto finance more useful in context outside of just trading and speculation. So using the distributed ledger technology to put assets that were illiquid on chain to become liquid assets, so everyone can own a little piece of it. That's innovation, right? To make even back to the payment points, I totally agree. The normal fiat payment system, the sort of the existing payment network structure is already very advanced for day-to-day fiat payments, right? Now this could be interesting when it comes to non-fiat or even non-currency type of assets in terms of payments. What if I want to send a digital gift to my friend, right? What we want to build a digital gift together and send to a third person. All these things is where I see the crypto and the blockchain technology can come into use and take us out of this little pigeonhole where crypto is only seen as the underlying technology of fueling more trading, more speculation, and more asset prices going up and down. And I think we're getting there. I think we're seeing more and more of these. I think this are the kind of technology that is being built and will really make it usable to the masses. Because if you go on the street, you look out 100 people on the street, how many of them are really traders? How many of them are really speculators? Right? Very few of them. There are more of them in bull market than bear markets. But otherwise, in order for the technology, for the industry to be relevant to all of them, you have to really create user cases that's outside of just trading, just speculation, and really empower them with the true benefits of this technology.
I think just due to the interest of time, maybe I'll just leave the final two comments to Gerald and Flex. You can share your point of views, right? As let's hinge on to non-bank FIs. I think the role and responsibilities that we have in this sector as it's growing. Yeah, if we just touch a little bit on this point.
Yeah, I think. For it's not just financial services. I think.
Right.
I think, in my view, crypto is not just about financial innovation. It's not just about technology innovation. It's also about the governance innovation. As Justin also mentioned, the DAO is not just about organization, community. It's about like governance. So I think crypto provided us a very good opportunity to experiment different kinds of governance systems and to see how this kind of governance system can work with the regulator to actually bring better services to everyone, to the people, not just to, currently the financial system is more working for those rich people. From my point of view, maybe biased, but after every financial crisis, rich people get richer and poor people get poorer. But crypto gave us a very good opportunity to see if we can utilize technology, utilize all sorts of new production relationship to provide better or more fairer opportunities for each individual. So I think not just banking or not just financial services, but also a good opportunity or equal opportunity for everyone in this world, for every people, everybody. Thank you.
Gerald, yeah,
sure. No, I think I have not much more to add to what the rest of the panelists said. I think there is certainly a lot of innovation going on, and I feel like for many in the audience or many people that are not living and breathing crypto and digital assets day in, day out, it's a little bit difficult to really understand and contextualize this very complicated and fast evolving space. So the role of regulated entities, the role of banks, asset managers, and all that is to actually just reduce the complexity and help guide folks to a better understanding of whether or not the exposure to the asset class helps them fulfill their investment objectives, their comports to their risk parameters, and whether or not on the liquidity side, whether it's something that continues that will give them the liquidity access that they require to meet their obligations. So again, it's nothing particularly unique or about the investment exposure to crypto. I think it is an asset class like many others, and it requires, therefore, the maturity of institutions that are willing to play by the rules, and then to work and assess the investors that are the most suitable to gain exposure. As with any other asset class, out there. So.
Right, thank you. I think I had a great discussion with all of you today, this afternoon. I think thank you everyone for joining us. What I personally took away, I think there's a lot of focus. I kind of directed you guys that way, in the application of crypto in financial markets, but I'm glad that the point about how crypto is beyond also just financial markets got touched on. I wish I had more time to talk about that.
Sharon, crypto means secret. That's the worst part of the cryptocurrency.
Yes, ciphers and stuff like that. Okay, so thank you everyone. If you have actually more questions for the panelists, feel free to reach out to them or even grab them on the site. And yeah, I think that's the end of our panel. I think thank you so much, Gerald, Sumnendu, Justin, Michael, and Flex, and have a good afternoon, everyone. Thank you.
Thank you.